If you've been watching the markets lately, something strange is happening beneath the surface of AI stocks. Nvidia keeps climbing. Intel, long written off, is suddenly back in conversations. And AMD, quietly consistent, refuses to disappear. What's changed isn't just technology. It's alignment. Late 2025 marked a turning point when Nvidia made a strategic investment into Intel, signaling a partnership few saw coming. Not an acquisition, not a merger, a calculated alliance. And that move alone reshaped how investors, analysts, and competitors now think about the AI hardware race. This isn't just about chips anymore. It's about ecosystems. About who controls the full AI stack, from CPUs and GPUs to software, data centers, and edge devices. And crucially, it's about where the market thinks the next decade of compute value will be created. Is this the beginning of a new AI power structure, or just a temporary alignment? For years, Intel's story was one of missed cycles. Manufacturing delays, lost server share, AMD took advantage. Nvidia bypassed CPUs entirely and went straight for AI acceleration. Intel, once the center of computing, suddenly felt peripheral. Investors didn't just punish Intel's stock, they discounted its relevance. But that narrative ignored something critical. Intel still owns scale, enterprise relationships, and one of the largest manufacturing footprints in the world. The problem wasn't demand. It was execution. CES 2026 changed the tone. Not because Intel suddenly dominated performance charts, but because it showed strategic humility. Instead of insisting on doing everything alone, Intel opened the door to Nvidia's strengths. And markets pay attention when pride gives way to pragmatism. But can execution issues be fixed faster than perception? Nvidia didn't invest in Intel out of charity. It did so from a position of dominance. Nvidia today controls the AI narrative, hardware, software, and mind share. CUDA is embedded everywhere. Data centers are designed around its chips. But dominance brings a new challenge: distribution. Nvidia GPUs are powerful, but CPUs still anchor most systems. Partnering with Intel gives Nvidia reach into millions of PCs and servers where AMD had been quietly winning with integrated designs. This isn't Nvidia hedging. It's Nvidia expanding. And the market sees it that way. Analysts still treat Nvidia as the anchor AI stock, even as its valuation assumes near-flawless execution. Is Nvidia reinforcing its moat, or stretching it? While headlines focus on alliances, AMD keeps shipping. Ryzen CPUs remain competitive. EPYC continues gaining server share. And AMD's APUs, CPUs with strong integrated graphics, are exactly what Intel and Nvidia are now responding to. Yahoo Finance analysts consistently frame AMD as the execution play. Not flashy. Not dominant. But reliable. And in markets, reliability compounds. AMD doesn't need to win every benchmark. It just needs to stay close enough while others take bigger risks. That positioning matters when AI cycles inevitably cool and margins tighten. I guess the key question here is second place in AI still a winning position? CES is often misunderstood as a scoreboard. People look for winners, losers, and knockout moments. But for markets, CES is something else entirely. It's a signal reading exercise. A place where companies don't just show products, they reveal priorities, confidence levels, and strategic intent. At CES 2026, Nvidia didn't arrive looking to convince anyone. It arrived to reinforce dominance. The messaging was clear, controlled, and future-facing. That kind of confidence tends to calm investors, not excite them, and that's exactly what we saw in the stock's measured reaction. Intel, on the other hand, used CES to show optionality. Multiple paths forward. Multiple partnerships. Multiple bets. That creates volatility, because markets struggle to price flexibility. The upside is compelling, but so is the uncertainty. AMD's presence felt different again. No dramatic reinvention. No sweeping alliances. Just continuity. Product roadmaps that made sense. Execution that felt familiar. And for many investors, familiarity translates to trust. CES didn't crown a winner. It clarified narratives, and markets responded based on belief, not benchmarks. What do you think? Are markets rewarding vision, execution, or optionality, and which one actually lasts? Once the CES lights dim, the real debate begins, and it doesn't happen on stage. It happens in analyst notes, earnings calls, and quiet portfolio adjustments. And right now, there's no consensus on how to play Nvidia, Intel, or AMD. Some analysts argue Nvidia remains the only clear AI winner. It dominates software, controls the high end of AI compute, and benefits from a feedback loop that's hard to break. From that view, Nvidia isn't just leading, it's becoming infrastructure. Others take a more balanced approach. They see AMD as the execution play, disciplined, competitive, and less dependent on perfect conditions. Intel, in this framework, becomes the optionality bet, the one that could surprise if manufacturing and partnerships align, or disappoint if they don't. Yahoo Finance frames this split simply but powerfully: investors aren't choosing companies, they're choosing beliefs. Belief in certainty. Belief in consistency. Or belief in turnaround. And that explains why identical news can push one stock up, another sideways, and a third sharply in either direction. This isn't confusion. It's a market actively pricing the future. So are you investing in today's leader, or tomorrow's structure? At some point, every AI story runs into the same bottleneck: manufacturing. Chips don't exist in slides, they exist in fabs. This is where Intel's story becomes uniquely complicated. Unlike Nvidia and AMD, Intel is both a designer and a manufacturer. That's a strength and a risk. Markets understand this. When Intel talks about turnaround, investors aren't just betting on better chips, they're betting on process discipline, yield improvements, and delivery timelines. Nvidia avoids this entirely by staying fabless. AMD does the same. Intel carries the operational weight that others don't. And yet, that burden is also leverage. If Intel's foundry strategy works, it becomes something no other AI company can replicate at scale: a vertically integrated AI supplier. That possibility, not current performance, is what keeps Intel in the conversation. What are your thoughts? Is manufacturing risk a liability, or the ultimate moat? Consumer AI gets attention. Data centers get revenue. This is where Nvidia dominates today, and why its valuation remains elevated. AI training, inference, cloud workloads, they all scale here first. AMD is making inroads with EPYC CPUs and Instinct accelerators, positioning itself as a cost-efficient alternative. Intel, meanwhile, is trying to reinsert itself using a hybrid approach: its own CPUs, third-party GPUs, and flexible AI accelerators. From a market perspective, this is critical. Whoever controls data center architectures controls long-term cash flows. Nvidia leads. AMD competes. Intel rebuilds. And investors price each stock accordingly. I'm curious to know what you think. Does leadership today guarantee leadership tomorrow in AI infrastructure? Well, here's the uncomfortable truth markets wrestle with: the best company isn't always the best stock. Nvidia's valuation assumes dominance continues. AMD's valuation assumes steady execution. Intel's valuation assumes improvement, not perfection. Yahoo Finance highlights this divide clearly. Bulls argue Nvidia deserves its premium. Skeptics argue expectations are already priced in. Intel, by contrast, trades on belief. AMD trades on discipline. This creates three very different investment cases, and explains why price movements don't always align with headlines. Now to you, are you paying for growth, stability, or a turnaround? Every AI narrative talks about opportunity. Very few talk honestly about risk, at least not until something breaks. But markets are always pricing risk, even when headlines don't mention it. The difference is how that risk shows up in each company's story. For Nvidia, the risk isn't technological, it's concentration. A massive portion of its valuation assumes continued, aggressive AI spending by cloud providers, enterprises, and governments. If that spending slows, even temporarily, Nvidia doesn't collapse, but expectations compress. AMD's risk is more subtle. It lives in the middle ground. AMD has to stay close enough to Nvidia to remain relevant, without overspending or losing margin discipline. Its risk isn't falling off a cliff, it's being quietly outrun. Intel's risk is the most visible and the most debated: execution. Intel is attempting a turnaround while competing on CPUs, building GPUs, scaling AI accelerators, and reinventing manufacturing, all at once. That creates the widest range of outcomes. Markets don't punish risk immediately. They punish surprises. And Intel currently carries the most surprise, in both directions. Zoom out far enough, and the chip war stops being about chips. It becomes an ecosystem war. Nvidia understands this better than anyone. CUDA isn't just software, it's a lock-in mechanism. Developers build for it, companies optimize around it, and switching costs quietly rise every year. AMD plays a different game. Its ecosystem strategy is openness and balance. Competitive hardware, improving software, and fewer dependencies on a single platform. That doesn't create dominance, but it creates resilience. Intel's ecosystem advantage is legacy and reach. Enterprises, OEMs, governments, Intel is already everywhere. The Intel-Nvidia partnership isn't about outperforming AMD tomorrow. It's about preventing AMD from owning the future uncontested. And here's the irony: Intel and AMD still collaborate on x86 standards. Two rivals working together to protect the foundation, while competing aggressively above it. That coexistence tells you this isn't a zero-sum fight. It's a long one. One that leaves me with the question: will ecosystems matter more than raw performance in AI's next phase? If you strip away headlines and look only at price behavior, the market's message becomes clearer and quieter. Nvidia is priced as the present. AMD is priced as stability. Intel is priced as possibility. That's why Nvidia doesn't spike wildly on good news. Leadership is already expected. AMD doesn't collapse on competitive threats. Consistency is already assumed. Intel, meanwhile, moves sharply on incremental updates, because the market is constantly recalibrating what it thinks Intel might become. This isn't confusion. It's an active negotiation between belief and evidence. Analysts hesitate to issue extreme buy or sell calls because the AI story isn't finished being written. Too much is still conditional: demand curves, manufacturing progress, geopolitical policy, capital spending cycles. Markets aren't indecisive. They're patient. And patience, in moments like this, is a signal in itself. Oh, well. Is uncertainty a warning, or an invitation? At the surface, this looks like a bet on AI chips. But underneath, it's a bet on structure. Will AI remain centralized in massive data centers, or spread to edge devices and personal machines? Will value concentrate in software, hardware, or integration? Nvidia represents dominance in a centralized, software-driven AI world. AMD represents disciplined competition in a balanced compute landscape. Intel represents optionality, a future where integration, manufacturing, and partnerships matter more than single-category leadership. Markets aren't choosing one answer yet. They're keeping all three in play. And that's why this moment matters. Because once AI stops being the headline and starts being infrastructure, the winners may not look like today's leaders. The real question isn't which stock wins this quarter. It's which strategy survives when AI becomes boring and essential. So, what have we really learned from this complex AI chip battlefield? Nvidia, Intel, and AMD aren't just competitors, they're playing a mix of chess and Go at the same time. Nvidia is the obvious leader, executing brilliantly and controlling the software stack. AMD quietly balances performance and reliability, proving that consistent execution can still win respect and market share. Intel, long counted out, is back on the board as a wild card, ambitious, risky, and potentially game-changing if its turnaround works. But what exactly is the takeaway? The AI chip race isn't about today's headlines or even this quarter's earnings. It's about strategy, ecosystem control, and optionality, and how investors price belief, not just product. Markets reward certainty, discipline, and surprise in different ways, which is why these three stocks move differently even on the same news. Here's the key question for you, our viewers: are you betting on dominance, steady execution, or the comeback story? And what does that say about how you see the future of AI hardware? Drop your thoughts in the comments. We want to know which strategy you believe in, and why. And if you found this breakdown helpful, hit like, subscribe, and ring the bell so you don't miss the next chapter of the AI race.